Hey guys, do I have an exciting video for you today? Today I'm going to be talking about a couple stocks that I believe have huge upside in the coming months and coming years. Some are penny stocks, some are in the EV market, some are turnaround value plays, and finally some are in the tourism sector, okay? So if you don't want to watch and stay through the whole video, here is a list of all the companies I'm going to be going over today, okay? And my name's Adam and I run an investment channel, so if you do like this content, please be sure to like and subscribe this video for more content like this. Okay, but let's get right into it. Okay, so the first pick is H2O Innovation. This is a penny stock, and it's a leader in customized water solutions. So pretty much water treatment. And if we're thinking about the main concerns or a couple of main concerns in the next quarter century, water shortage or at least a lack of access to clean water, fresh water, not salt water, of course. That's going to be one of the main problems, right? And this truly is a global leader in this industry, right? And they recently just reported strong quarterly results, which of course we'll go over. And I like how it's not noticed by big firms yet, even though it has had a huge run up in its stock price. I do believe that it has potential to run up some more. And of course, I do own some shares of this stock. I just want to disclose that, okay? The next company is an interesting electric vehicle play called Solo, at least it trades under Solo, and it caters towards a unique market, and you'll see what I'm talking about once I show you what their cars look like, okay? And I like it because it's a small market cap, so which means it has a more of an investment opportunity to earn more. And I also like that it doesn't get as much attention as companies like Neo or Xpeng have in the past, week, where they showed a huge run up in their stock price due to their quarterly results. And next is still an EV play, but again, it caters towards a different market, right? And this company is HYLN, okay? And it's a beaten down play. It's down by over 50% since its highs. It recently did a reverse merger via SPAC with Tortoise Acquisition Group. And I really like this stock because, of course, it again caters towards a unique market, right? So, if we think of the big names in EV market, of course, Tesla and companies like Neo, Xpeng are coming up, right? But Helion is specifically catered towards long haul trailers, right? And not necessarily a pure EV play. It has one product that's a pure, combined, it's an EV play, their ERX truck, and also they deliver electric powertrains to sort of reshape the long haul industry at this current moment, right? So look out for that. And of course, I own shares in Helion as well. Tesla, I own some shares in Tesla. And I just want to mention this stock because it's just way ahead of the competition, right? So in a decade, most of the new car sales are going to be electric. So there's a huge market opportunity there, right? Energy business opportunity is huge, right? So what they're doing with their energy storage in terms of their batteries, with their solar panels, is a huge restructuring of the whole environmental sector and the whole car sector, and the whole just green energy play, okay? What they're going to be doing with their auto insurance industry is going to be massive, right? Tesla cars are some of the safest cars on the road. So Tesla's actually starting to offer insurance opportunities for buyers of Tesla vehicles, and they're going to undercut other insurance banks or insurance companies just because they know their vehicles are the safest, right? And so, of course, when someone buys a Tesla, they're in the future going to default and buy Tesla insurance because it's going to be the cheapest. And again, this is a source of recurring revenue, one of many that Tesla will have, right? And of course, Warren Buffett made most of his billions off of the back of insurance companies, right? Next thing, autonomous taxi network, they're robo taxis. That's also another opportunity for recurring revenue. And I mean, undoubtedly, it has the best specs of any electric vehicle maker out there as of yet. It's going to experience massive growth for years, which we'll check that out. Autonomous driving capabilities, again, that's going to be a source of repeated revenues. Brand is respected globally. Everyone wants to own a Tesla. And I mean, it's at least like 5 years ahead of the competition, right? Let's just be honest, okay? The next one is a travel turnaround play. So, of course, this past week we have had huge vaccine news out by Pfizer that their vaccine is about or even over 90% effective, right? So that's huge. And that means that companies like Carnival Cruise Lines are going to benefit from this. And will hopefully not be as beaten down in the future, right? Next company is again another company that I own called Walgreens, and according to me, it's still a widely beaten down value play, right? It's involved in the retail sector, in the pharmacy sector, which is something that Amazon hasn't been able to tackle yet. Um, and again, this vaccine shows promise. And because it's involved in pharmacy, I do believe that this company will actually be a major hotspot for distributing and giving people potentially the vaccine for the virus. Okay. And finally, I have to include here Alibaba just because I think it has more of a growth potential in terms of the stock price than Amazon, just because it has had a recent pullback just due to increasing concern over China regulations. But hopefully, in China's best interest, it's in China's best interest not to meddle with huge companies, right? And recently, they just meddled with Ant, which was supposed to be the largest public offering. And they said that, based out of investor concerns, they don't want to put Ant public yet. Okay, so of course, there's been a pullback yet. But of course, China should be focused on growing their economy, which they really are, and so they wouldn't want to, or they shouldn't meddle with Alibaba's business. So I don't think that that's necessarily a possibility or a huge possibility for Alibaba. And of course, the tensions between the U.S. and China are quite high right now. But hopefully with Biden as president-elect, we'll have to see how this actually goes down. If he'll become the full president, might take a couple months. There's going to be mended tensions between the U.S. and China. Okay, so let's get right into it. So again, the first stock, H2O Innovation, all right? And again, it's a leader in customized water and wastewater treatment solutions using membrane technologies. We design and fabricate state-of-the-art integrated water treatment systems for municipal, industrial, and commercial users and specialize in applications for drinking water, water reuse, wastewater treatment, and industrial processed water. Okay, so think of like desalination plants, think of like reverse osmosis type stuff, but a lot more complicated than that. So they have specialty products related to water. Okay, and this is a fast growing company. And if we're looking at the stock price, by the way, it trades over the Canadian Ventures Exchange under the ticker symbol HEO. Right now, trading at $1.89 Canadian. I bought it at around $1, and I bought it at $1.78. And I mean, I've experienced quite a nice run up, but based on their previous quarter results, which came out this past week, I think I may be buying some more shares, right? I mean, over the past week, it hasn't really done much. Started at $1.85 and up by like $2, 2% to $1.89. Um, and I really do like the potential of this company. So, and if we're looking here, it's a penny stock, 146 million market cap, right? And of course, if we go down to their Yahoo Finance section and look through their results, we can see that they reported strong first quarter 2021 results despite the pandemic. So they saw revenue growth of 24% over the same period in 2019, right? Which is huge. Sorry, in 2020, right? So that's just ridiculous, right? And gross profit margin was 27.1% for the Q1 2021 compared to 23.8%. So when margins are increasing, that's a good sign. It means they're scaling production. So each cost of revenue is decreasing, right? So that's a very good sign. And they actually reported net positive earnings of 1 million for the first quarter 2021, fiscal 2021, compared to a net loss of 1 million in the previous year. Okay, so that's huge, and I really like how they're slowly building their business model. And actually, this is a company, again, if we're looking at the news here, that recently got its price target updated. So again, remember, it's $1.89, and now a company just recommended this as a buy from $2.25 to $2.50 per share based on the previous quarterly results, right? And of course, this is a company that we don't have to worry about the demand for their products, right? So if we're looking at world wildlife and global water scarcity, right? Only 3% of the world's water is fresh water, and 2/3 of that is tucked away in frozen glaciers or otherwise unavailable for use. Okay, so some 1.1 billion people worldwide lack access to water, and a total of 2.7 billion people find water scarce for at least 1 month of the year. Okay, and inadequate sanitation is a problem for 2.4 billion people. So that's huge, right? And it's only expected to get worse. So by 2025, 2/3 of the world's population may face water shortages, and then ecosystems around the world will suffer more. So companies like this, I'm very happy to support. And I think that this is a company and its products will be in demand for some time, right? And I do believe that since this company isn't really widely known just yet, just because it's a very small penny stock, so a lot of firms will not even like touch this stock. I do believe that it could have huge potential in the coming years. All right, and let's just read from the CEO. We are delighted to present on the heels of a solid fourth quarter, strong financial results for Q1 of our new fiscal year. As we continue to grow our revenues organically and through acquisitions, we're enjoying margin expansion of our gross profit and adjusted EBITDA concurrently, which translates into an increasing net earnings of 1 million for Q1, a record high quarterly performance for the corporation. Okay, our business strategy to focus first on recurring revenues is working and providing financial stability in such uncertain and volatile market conditions. All right, so et cetera, et cetera. And so, of course, once we emerge out of this pandemic, this company is also expected to perform better, right? But even though that it turned a profit in the first quarter of fiscal 2021, that's big news, and I'm very excited about this company. Okay, so let's move on to the next one. The next one is trades under Nasdaq, ticker symbol SOLO, and it's Electra Mechanica Vehicles Corporation. Okay, and I mean, I just want to show you let's look at the cars, right? It's just like a one person car, and I mean, to me, it's not appealing to go out and buy a car like this, right? However, you have to respect that this is a very unique and niche market, and the revenue growth for their quarter that they just reported was ridiculous, which is why we've seen such a huge run up in the stock price, right? So let's take a look. Okay, Electromechanica news for Thursday includes Solo, et cetera, stock soaring higher after releasing its earnings report for the third quarter of 2020. This comes after reporting revenue of 300 million Canadian for the quarter. And you have to understand this is a company that right now, sorry, these have better numbers, that is 489 million market cap, but this is, of course, in US currency, right? So, I mean, they just reported revenue of like 300 million Canadian, which is around, I don't know, 250, maybe a bit less than that US. So that's huge, right? And I mean, the reason why that the market cap is so small is, of course, one, I do think that this company is not yet widely known like Neo, Tesla, Xpeng are, and also because it's taking massive losses, right? So the company's revenue for this quarter is up 50% from 200 million in the same period last year. And however, operating loss came in at 8.8 million Canadian, which is 12.8% wider year over year from 7.8 million loss in the previous year. Okay. So I mean that's pretty big, right? And the Electromechanica earnings report also has its net loss coming in at 14.9 million Canadian, right? And that's 181% worse than the company's net loss of 5.3 million Canadian from the same time last year. Right, so that's probably why the company is trading at like a 400, close to 500 million market cap. And I mean, but this is pretty common for EV makers, right? Once they're ramping production, they're obviously expected to take a loss, right? Look at Neo, look at Tesla. Neo's still losing quite a bit of money. Tesla's finally become profitable for the past actually 4 quarters, but it takes a long time to get there, right? But evidently, there's demand for their product, right? And let's look what the CEO is saying. So, with our anticipated production ramp over the coming quarters and future plans for a U.S. facility build out. By the way, they're a Canadian company based in BC, which is also what I like. I mean, I'm Canadian, but anyways, we have created a financial pathway to execute on our immediate and longer term goals and objectives. While we are in the most financially secure position in our company's history, despite the pandemic, I might add, our focus remains on managing our resources effectively and efficiently to maximize results and output for our business and generate greater value for our shareholders over time. Okay, and of course, we're looking at a stock, I like this price chart more accurately, that was up 30% on the day because of these strong earnings, right? And now it's trading at $6.29. However, I do think this has quite a bit of run up, right? I do think electric vehicles will run up for some time, right? And I mean, even if you buy now, I do expect the stock price, to spike even above like $7, right? I don't own any shares yet, but I am looking to get in. Hopefully, if I see a bit of weakness, where I'll put it in a couple dollars and see where it goes from here. Of course, if we're looking again at their market, right, it's just like very small, compact cars. The specs aren't that good. The range is like only 100 miles. Speed goes only to 80 miles per hour. So it's kind of like a safer version of a motorcycle, right? Because you're in an enclosed space. And I mean, yeah, sure, this is going to have a large market, but again, it's a very niche market, right? So it's not going to be, of course, ever as big as Tesla, because these cars, again, to me, at least they don't look as appealing. But of course, it's going to be, a market nonetheless, right? And I mean, right now they're like half a billion market cap, right? So it still has a huge upside, and they actually have, of course, vehicles on the road, which is what I like. A car that's proven and that has sales coming out of them. That's something that I look for in a company, right? And the next one is HYLN, and HYLN produces electrified powertrain systems that can augment or fully replace traditional diesel or natural gas fueled powertrains. Okay, so again, two main products: the Hypertruck ERX, which is a fully electric version, and then the hybrid, which is the electrified powertrain. Okay, and so what I really really like about this company is, again, it has a very niche market. The market cap is about like 3 billion right now, and it's down by over 50%. And I think what I like about it is summed up by this quote right here. So Helions Tech tackles one of the biggest pain points for the logistics and transportation industry: how to lower emissions without having to fully replace all existing assets and infrastructure. A move that is cost prohibitive for many companies, right? For example, if you're not like a Walmart or a Tesla that can literally throw out billions of dollars to replace their existing fleet almost immediately. The ERX solution transforms existing fleets and delivers the desired efficiency impact: zero or even negative emissions with significantly reduced operating costs over time. Okay, the range on these trucks is also quite ridiculous. It's quite high, even higher than the expected Tesla Semi. And again, what I like about this is that, of course, not every company that's looking to transform their diesel trucks into electric can afford to pretty much replace all their fleets. So what I see is a transition from, of course, from diesel and natural gas trucks to, of course, partly hybrid electric or even fully electric with the ERX solution. And then again, over 10 to 15 years, maybe even more, then we'll see, companies involved in long haul transportation to become involved in fully electric vehicles. But I do believe that in the process, this company Helion caters to that specific market, right? And so I really like this company just for that reason. And of course, I'm an investor in Helion. Um, and again, I like how niche it is, and I like what it's doing, right? And of course, they announced their third quarter financial results, and right now, they got approximately 520 million in the net proceeds to fund Helion's growth plans and long-term objectives. They installed 8 hybrid electric units, which may seem like a joke, but it's actually in line with their yearly guidance. Okay, so that's good news. It's not beating yearly guidance, but again, these things take time. Okay, and then they signed an agreement with FEV North America Inc. to accelerate commercialization of the Hypertruck ERX. Okay, and executive commentary, we'll just read this quickly. With ample resources from our strategic combination, Helion is well capitalized and primed to disrupt the powertrain market, as I stated. Our focus in 2020 and 2021 will be to position the company for long-term sustainable growth, capturing the material market opportunity from the electrification of Class 8 vehicles, which are the long-haul delivery vehicles, pretty much. Along the way, our dynamic and proprietary solutions will help our commercial vehicle customers change the way they view performance, total cost of ownership, data, and sustainability, commented the CEO. So in Q3 2020, we made progress towards commercialization of our hybrid and Hypertruck ERX solutions for the Class 8 truck market, while also establishing key partnerships. We're experiencing strong interest for our solutions and are utilizing our resources to develop a scaled infrastructure that will be able to support demand from this 800 billion market. Overall, I am pleased with the progress we have made, and we remain on track to meet our product milestones in 2021. Okay, again, I like this company overall, right? And it was, as we can see here, definitely gotten beaten down, was like $55 and change at some point, and now it's trading at like $22. You know, it was down to like around $18. I got in at around like $23, so down a little bit on the position, but again, just happy that again invested in this company, even just for ethical reasons. And I mean, Tesla, like same thing. I mean, to be fair, NIO was up this week, Xpeng was up, and actually looks like Tesla was down this week by 7%. I got in Tesla at around $3, $370 a couple months ago, and I'm just happy with my position. Like I said, I don't think I need to go into this more in depth. There's tons of videos online about why Tesla is just dominating the competition and deserves its 387 billion market cap, right? And you may think that that's a bit pricey, and I know many people do. However, I just love what this company is doing. I think their vehicles are sweet, and you can't find better specs out there. They have their Cybertruck coming. They have their like Tesla Semi coming, which Walmart actually pre-ordered, I think like 135 of them. So it's just going to be a beast, and not, considering their recurring revenue streams in the future, right? Like their insurance portion, their robo-taxi network, which I think is going to be huge, and that will actually mean people will not be driving as much, because it'll actually be cheaper to get into an autonomous taxi, right? Because the autonomous taxi will charge people less, right? Because you don't actually have to pay a human to drive this thing. Okay, so I mean, I just love Tesla, and I love what it's doing, and I believe it's at least like 5 to 10 years ahead of any other EV play out there. Okay, and again, respected brand. Everybody wants a Tesla, and they're also coming out hopefully within the next couple of years with their 25,000 vehicle, and then Teslas will just be affordable to the mass market. Okay. And lastly, I just want to talk about some travel stocks. All right. So Carnival Corporation, we can see, year to date, it's down 70%. Right. This used to be a revenue beast, as we can see in 2019. In revenue, they made close to $21 billion. Right. Right now, their market cap is just under $14 billion. So definitely beaten down. However, we have the promise of a new vaccine. That being said, though, it will take time, probably by like March next year, even to widely distribute this vaccine to everyone who wants to get one, right? So it will take some time for cruise ships to open up, for travel to open up. But again, once it opens up, this company will become a revenue beast once again, and we're looking at maybe again not like $60 as it was year to date, but even in the $40 price range. So more than a 2x potential I see in the near term future. And I do think that this company has a very low chance of bankruptcy. I think if anything, the majority of the bankruptcy claims would have happened, somewhere in between May and September, right? So once I think they got out this difficult period, I don't think they're going to go bankrupt. Okay. Right now trading at $16 a share. I think anything, if we're looking at the monthly chart, anything under like $15, $14 is definitely a buy for me. I don't own any shares, but I will be planning on putting some shares in once Carnival goes under $14-ish. Okay. Next company, I own some shares, and this is a value turnaround play for me personally. And I put in shares at around $39 when it was trading, I believe. Right here, they announced poor quarterly results, and I was able to get in at $39. Stock obviously dropped by about 15%, but now I'm up on my position by about like 10%-ish, 15%. But anyways, this is a long-term play. I already received a dividend. Again, they also have a dividend, which is really nice. Right now, 36, close to $37 billion market cap. If you don't know what Walgreens is, pretty much it operates a number of pharmaceutical manufacturing, wholesale, and distribution chains. So it's not only a convenience store, but operates sort of like a pharmacy sector on the side, right? Which, in my opinion, is going to be huge for, of course, not only the continuation of giving people flu shots, but potentially the pandemic vaccine, the virus vaccine, right? And of course, you can see year to date, this stock is still being down by 27%, right? Even if we go to the 5-year chart, this stock is beaten down even more by 47%. So this is a company that I plan on holding, long term, just for security, just for growth. And I do believe that right now there's a huge reversal in the stock market in general from high flying tech stocks into more value plays and travel plays like Walgreens, like Carnival Cruise Lines, right? So just watch out for a turnaround from Walgreens, okay? Finally, the last one is Alibaba. Okay, and I mean, I've been wanting to get into an Amazon and Alibaba, but I just couldn't, I just couldn't do it. But I do think that now with this recent pullback, if we can see here, um, over the month, I think the high was around $317 USD, but it dropped by about 17%. I think mainly due to regulations concerning Ant Group. As you know, the Chinese government didn't allow Ant Group to go public due to concerns over. They stated that it was like shareholder concerns, et cetera, et cetera. But this company is just a revenue beast, and we're going to look at something that just blows my mind, right? But it's down, like I said, 17% over the month, or like nearly over the month when it was trading at above $300. Right now it's $260. And I do think I might start having to add some shares. We'll see if this can move lower. Maybe at around 250, I actually might, pull the plug and buy some shares, right? And this is just like ridiculous, right? So, first off, this is one of the most popular deals or one of the most popular days in terms of e-commerce for Alibaba, right? And they just did a record 38 billion haul, right? Just read this. It's ridiculous. So in the 11th edition of Singles Day, the world's biggest shopping event ever, Chinese e-commerce giant Alibaba set a new sales record of $38.4 billion. So in 24 hours, they sold more than half of what Amazon sells in an entire quarter. Just that boggles my mind, right? And that was, this is in the midst of the pandemic. I understand that people are buying a lot more online, but still, it's just insane that they have these numbers, right? So, Alibaba can be said that it's like the Amazon of China, right? And I do agree, and I do believe that, with this recent pullback, Alibaba might be a buy. Okay, so again, over here, these are all the companies that I recommend. Let me know what you guys think in the comments below. And of course, if you did enjoy this video, please make sure to give it a big thumbs up and subscribe if you haven't already. And yeah, I'll see you guys in the next one. Take care.